Welcome to my weekly review. You're looking at a monthly chart of the Nasdaq, and fair warning, this is going to be a long video. When things are going well, my videos tend to be a little longer. When they're not going well, I cut them short. But I just wanted to, as Phil Lesh and Bob Weir would say, take a step back and look at the Nasdaq here on the monthly. And I like to listen to people who are smarter than me, so I listen to people like Peter Lynch, and he talks about corrections and bear markets, and he likes bear markets. You can take advantage of bear markets. You can get good prices in bear markets. And he says we have a correction over history of 100 years or more in the market. Every 2 years, you're going to have a correction of 10% or more. And every 5 or 6 years, you're going to have a bear market of 25% or more. Every 5 or 6 years, we had a 2000 to 2003 bear market where we had the dot-com crash and then the 9/11 events. So this extended the bear market 3 years in the making bear market, the overvalued tech stocks and then the tragedy of 9/11. And then so we rallied back up through that. And then we had the financial crisis, 08, 09. This is 80% loss. This is more than a 50% bear market. So these are pretty extreme bear markets. And you could see that it was like 15 years before we actually made it back to that old high on the Nasdaq. So yeah, it was a tough time there in the first part of this century. But the point is, the two bear markets, then we had the COVID bear market where we lost 50% on the index. And then the most recent 2022, we had the Fed-induced, higher rates, contracting multiples, bear market, where we lost 38% in 11 months. That's more of the garden variety type of bear market. So we've had two bear markets in the last 4 years. And Peter says, we only have, one every 5 or 6 years. So the bears are thinking we're going to have another bear market here. And I think they're wrong. And everybody has an opinion, and that's mine. I believe we just broke out in May of 2023. So we're a little bit more than a year into this new bull market. I'll go to a weekly chart here, and you can see the markets here as we broke out last year in May, right around in here. And then we had the 3 legs down last summer and fall, and broke out on October 26th. It hit bottom, and we've been in a rally mode. Yes, it pulled back in April, and then on April 19th, it hit a low, and we've been in a rally mode, power trend ever since. So now I'm going to go to a daily chart, and you can see this trend here, pretty strong trend. Then we had that pullback below the 50, and now we're in another power trend. And, last week we had a little bit of a pullback, but, this is... what can you say? This thing looks wrong to me anyway. What's going on here? There's your weekly. So the Nasdaq was still up 0.25% last week. And I know it was up yesterday, but this thing's showing it down 354 points. So I need to go another day. Oh, well, it doesn't have Friday in there. Well, I'm just going to run with it anyway. Friday was up 115 points. And it did pull back after the data, the inflation data, and then so this is going to be my next talking point. So this is Thursday, right, the 11th, and it fell 364 points on the Nasdaq. And so let's go to the Russell here, because we had a change of I think we had a change of not leadership. We just had a rotation in a smaller capped stocks. There's been a narrative that the Mag 7 has been Magnificent 7 stocks, and I'm going to get to those in a minute, have been driving the market, and pretty much true. But now, as we get into this second year of our bull market, I believe that maybe we can see some of these smaller cap names, more risk names, not take leadership, but just outperform. And there you can see this is a possible breakout. I'm going to go to TNA. This is a 3 times levered. And you can see that it's trying to break out of this stage 1 base. And if I go to the daily, I'm going to say, the last couple of days since that inflation data came in, and there's a thought that the Federal Reserve might start cutting interest rates and the multiples will expand. these stocks will do better. But I like it if it can get above 43.84 and $44, I'd call it, then I'd feel a lot better about this breakout here. But obviously it looks promising. It's a good start. It's too early to say, yeah, the small caps are going to rip, they're going to rock and roll. But I just wanted to use that as a backdrop for today's video, because there's a lot going on in the market. And if the Russell or the small caps do start to outperform, then I'm going to give you some names at the end. So you're going to need your pencils and paper and write some ticker symbols down. But I'm going to start, like I normally do, with the Magnificent Seven stocks. And obviously, when these stocks go higher, you're going to see the Nasdaq and the S&P, and Apple's a Dow component. So this is when these stocks go higher, Apple, Microsoft, those are going to drive the index higher. Obviously, this is a weekly review, so I should go to the weekly chart, and this thing was up nearly 2% last week, and you can see the breakout from that 3 weeks tight area after their developers conference. Apple's just been on a nice run. Microsoft, it pulled back last week 3%. So let's go to the daily chart. It's still only 3% off its high, and it's trading at the 21. I would imagine it would find support there. We'll see next week. Amazon is another stock that pulled back to the 21 last week. I would think it would find support there, but it is having trouble with that 200 number. This is short-term stuff, right? I mean, if you've owned Amazon for a long time, this is nothing, but it does have a little bit of a ceiling there at the psychological 200 level, and we'll just see how it handles that. You can see the earnings line heading due north, and if they continue to deliver earnings, I would imagine that 200 will be in the rear view mirror pretty soon. It just depends on your time frames when we're talking about stocks. Meta Platforms having trouble with the 500 level. You can see the sell-off after its earnings here, and then it formed this cup with handle pattern, and I thought it was going to take off. This was a Friday, I believe, the prior Friday, the 5th, and then I thought, wow, it's a 540. Okay, it's going to leave 500 in the dust, and it just like a magnet pull right back to it. So the 500 level is definitely providing some resistance for Meta Platforms. Now, these companies are all going to be reporting earnings here this month, so things are going to change pretty quickly here. Google is another one that's just real strong name, pulled back last week as we saw the rotation into the small cap stocks. It doesn't take much selling in these stocks to fuel a rally in the small caps because they're so small, and these ones are so big. But still, only 3.5% off of its high. Google looks fine. Yeah, once again, they're going to report earnings on the 23rd, so it's all coming up here. Tesla, the auto stocks have been hot. I'm going to talk about that in a minute. Obviously, it broke out of this downtrend line. I believe we had this on our ready list about 192 on that day when it broke above. Had a nice run, surprising run. Pulled back to its 10 on Thursday, and then dipped below it. It got downgraded, started in an open lower, I believe, and then open lower here, and then just went, buyers came right on in, and it was up like $10 on Friday. It closed up $7 or 3%. So Tesla looks good too. And then NVIDIA, of course, the king of AI. Just broke out of a base, ran up, pulled back to the 21, finding support at the 21. And now on a Thursday, pulled back to the 10, just had an inside day on Friday. This is all very short term. I mean, if they continue to deliver triple digit, sales and earnings growth, the stock's going much higher. And you could see their earnings line heading due north like the stock. It's amazing how that happens. Okay, so that's it for the Magnificent Seven. Everybody knows about them. Everybody talks about them all the time. So I'm going to move on to a couple other stocks before I get to some new merchandise that I haven't really been talking about too much. This is SMCI. I just wanted to point this out. This is, a leading stock, one of the top performers this year. You can see how it broke out of the base, ran up, and now it's just forming a base here. Once again, if this earnings line continues trending higher, and I believe it will, then the stock's going to catch fire eventually and run higher. It's at 900 now. So yeah, you can see the moving averages starting to curl up here at the 10, the 21, the 50-year stack. The RS rating starting to move through these moving averages. So I'm keeping an eye on SMCI. That one looks pretty good. This is the top performing group in 2024. The computer hardware peripherals rated 5, but it's a top performer by a long shot. Dell had a nice run and then sold off with earnings, just supported at the 50, and you can see it's just kind of squatting at the 50 here. But as long as the 50 is rising and it stays above the 50, the stock's going higher. I mean, it doesn't take much of a magician to figure that out. HPQ, mathematician or magician, it's just logic. HPQ, I got to go to the weekly because this is a weekly review. You can see the consolidation here, then the breakout higher. Now it's just consolidating again. Yeah, it shows a flat base pattern, which is 15% or less depth in the base, and you can see it's 13% in 5 weeks or longer in duration. So HPQ looks pretty good as well. Anyway, that's that group. There's another group that I like, the Miracle Drugs, NVO. They're having a problem with the Catalent deal. The FTC, Dr. No, is asking for more information because Catalent has a manufacturing plant in Indiana, Belgium, and Italy, and it's antitrust that Novo is going to have a monopoly in manufacturing. But I just think that they like to say no and give companies a hard time. But you can see this is a 6 week, 6 weeks tight closing pattern, and 6 weeks, it's essentially a flat base. But you can see a prior base here, right here, the cup with handle, it ran up, and now this is 6 weeks tight closes. And I think it's just stalled due to the Catalent deal. There was these politicians have been hammering this thing because their drug prices are too costly, and it's an election year, I get it. And then, Dr. No's giving him trouble with the Catalent deal. And then there was a study that came out and said that it causes blindness, which people have been taking this drug for years and nobody's claimed blindness. But a study came out and said it helps with dementia. And it stands to reason that these companies with these weight loss drugs, when you lose weight, it's going to help your heart, your kidney, your liver. It's going to help with inflammation. It's going to help with your dementia now, the study shows. And then extra read all about it. If you follow the news, it helps women fertility rates. Women are getting pregnant as they lose weight, they become more fertile. So there's no telling. Doctors have called these miracle drugs, and the stocks are certainly reflecting that. This is Eli Lilly. It's up 12 weeks in a row. Hello. Yeah, I ran out of fingers here trying to count all these weeks, but broke out of this double bottom base and has just been ripping higher. Yeah, 12 weeks in a row. Since the April 19th week, which was the low in the index, this thing has just been on a roll, supported by the 21 EMA on the daily. So Eli Lilly just looks fantastic. A couple other small cap ones that this is 550 million. I should save this for the end when I'm going to give my small cap stock reviews, but EBS, you can see the earnings line going up. You can see the stock going higher. ADMA, it has nearly a 3 billion market cap. This one, you can see this one looks like Eli Lilly, just ramping higher. TGTX, a lot of short sellers in this one. You can see this base forming here, 3.2 billion market cap. Yeah, I still like this one. I had this on the ready list earlier, I think 1841 to 1902, and it's got a standard buy point at 2267. So yeah, this looks like some nice consolidation here, tight trading within the base, a little pullback on Friday. Yeah, TGTX looks fantastic. Anyway, INSM, yeah, this one broke out on news of a positive trial, and that's why people like drug stocks, because you can make big money in a short period of time. And they can also crash and burn and ruin your portfolio if you get too heavy in a stock and you have a negative trial. Anyway, I'm going to move on to something more familiar with me. I like the drug stocks. I like the retail stocks. I like the hardware stocks. I like the Mag 7 stocks, but I also like Deckers. This thing sold off. The CEO is retiring, so it could have a factor in it, but it was down more than 20% after the Nike earnings. Nike is the big kahuna in this space. And so you can see on the weekly here, it's really, crashed through its 50. Nothing changed with the story, and it's now 19% below. And it's down, I believe, 2 months in a row, which is pretty rare for this one. So Deckers, I had to buy this one. I just think the risk reward is pretty good here. It filled this gap from this breakout day when it broke out following its last earnings report on May 24th. It was up, what, 14%, and it came back, closed this gap here at, what is it, either 1,036, no, come on, 908. So it's even below 908 right now. I just think it's good risk reward. It sold off Wednesday for some reason, $45. It was down a lot more than that. Traded down to 851, had an inside day on Thursday. And then Friday, they announced the 6-for-1 stock split. They're going to report earnings on July 25th. I'm going to hold through earnings. I don't think the story's changed here. They're doing, I don't know, 6 billion in sales, and it's a 22 billion. So, it's less than 4 times sales. I'm just going to take a swing at this one. I think the risk reward is pretty decent here. Another one that I like is ELF, 11 billion market cap. Could this thing be a 5-bagger from here and be a 55, 60 billion market cap? Sure, it could. Could it be an Estee Lauder type? Sure, it could. They have to expand globally, and they've started to do that. They have to continue with this, 70% sales growth is not bad. We're just gonna have to wait and see on ELF, but it's had a big run. It's shown the ability to run. It's been a 10-bagger or more since a 20-bagger, right? Since the IPO. If I go to a monthly chart, you can see the IPO. Yeah, there's your IPO base here, your institutional due diligence, and then the advanced phase. So ELF looks fantastic to me on the daily, on the monthly, on the weekly. Just looks like a fantastic chart. Now, some people were, getting, on Friday, it ramped up on an upgrade. It was up to like 220 or something, and then it sold off to 210. So people were upset, like, oh, this thing's got no strength. It sold off. And if you go to the daily, I believe the closing range was below 10% or 15% of its daily range. So I go, okay, yeah, it was down, it sold off in the end of the weekend, but for the week, it was up 5.32% and closed at 62% of its daily weekly range. So just, relax, use different time frames to really assess the stock here. ELF looks fine to me. And then Bros is another one that I believe could be 5-bagger, 10-bagger. Why can't it be 35 billion market cap or even 70 billion and catch up with Starbucks? Man, all the young kids that I talk to, they don't need, nobody even goes to Starbucks anymore. None of these young kids. And yeah, Bros is where they go. And yeah, Bros looks to me like this is just going through its institutional due diligence, and now it's in its advanced phase. Yeah, it was down 3% last week. Sold off a little bit, and you can see on the monthly, this, to me, this thing is just getting started. So, but everybody has their own opinion, like I said, and that's mine on Bros. Okay, I'm going to get to some. I'm just observing now, trying to keep an open mind here as I talk about the rotation out of some of those Mag 7 stocks and into smaller groups or other sectors, and these are groups that I normally don't talk about much. This is AJG Gallagher. It's got a 59 billion market cap. This is no small company, but it broke out of a base and looks fantastic. I'm just going to go through these quickly, just acknowledging this is Aflac. These are breaking out and trading at new highs. So you got to love new highs. PGR is Progressive. They have pretty cute advertisements on TV if you're into that kind of thing, but trading tight within a base, hasn't made this move yet. To me, that's what you want to see. It's shown the ability to make a move, 149 to 217. Now it consolidates in a base here. Yeah, okay, it's a later stage base, but later stage bases can work too. So 9 weeks in this base, and you could see the earnings line heading up. So I kind of like Progressive here on the daily, on the weekly. Definitely one to write down. PLMR, one that I hadn't talked about in a long time, kind of a thin one, consolidating in a base as well. Made a big move on Thursday and Friday. This is one of those smaller cap, 2 billion market cap stocks. And then, of course, my favorite ticker symbol, Bros trying to make new highs as well. Friday, I believe it made a new high, so new highs are bullish. And this is Jackson Financial still consolidating in a base, pull back to its 50. Gosh, I should have had this last week as it starts to make its move up off that low of 71 and went up to 79. So that's a nice, 10% move in a couple of days. We'll take that, but still one to watch. All right, I'm out of the insurance, and I've got to acknowledge, trying to keep an open mind here, not a group that I normally look at, and that's the aerospace defense. This is ERJ and this double bottom base here. It looks pretty good to me. Pull back on Friday. I was trying to get MOOG. I don't know why it's not recognizing the symbol, but oh well. I'm going to go to CW, another one in this group, aerospace defense, just consolidating in a base. I'm just saying, I'm just recognizing, just acknowledging these companies. DCO, Duke amongst totally thin stock, 66,000 shares traded, very small, but just acknowledging, trying to keep an open mind here, and just acknowledging how some of these stocks are doing, pretty well. In the aerospace and defense, this is DRS Leonardo, 7 billion market cap, and this one broke out and is trending higher, looking like it wants to be Kelly Slater and surf its moving averages to higher prices. AIR is an aerospace defense, and it's a weekly review. I should look at weekly charts. You can see it's consolidating in a base near the top of that range. So AIR is trying to break out. A couple other ones. If I see if I can get MOOG again, it's not. Oh well, I must be typing in the wrong ticker symbol. CR Crane. This is diversified operations, not really aerospace defense, but I just wanted to point out, consolidating in a base, showing the ability, to make these big runs. So keep your eye on this one. I'll take 82 to 150 any day. If it wants to do that again, I'm all in. Okay. It forms a base, makes a run, forms a base, makes a run, forms another base. Kind of like that. And then Eaton is another one of these, shown the ability to make big runs, and now it's consolidating in this base here. And it's, to me, this looks pretty darn good. The problem is, broke above its trending line here last week. Should have taken note of that, Wednesday. But they have earnings coming up. So I don't know if you want to go heavy before an earnings report. Just pointing it out, keeping an open mind here. Some of the loan stocks, this is way out of my area. I'm just trying to acknowledge, the rally through the 50 here with some volume. So that's SLM Corp, of the 4.8 billion market cap stock. ENVA. Now, I'm not in any of these. I'm just trying to point out a lot of stocks are doing well in this market. You'll hear, the financial media talking about it's just 7 stocks. That's a bunch of hooey, as my grandpa used to say. There's a lot of stocks, and that's my point this week, weekly review. There's just a lot of stocks doing well, making new highs. This is another one. Less than a 2 billion market cap, Innova International, ENVA. I'm just pointing out a lot of these stocks here that are doing well. COOP, Mr. Cooper Group, you can see consolidate, run up, consolidate, run up. Now it's consolidating again. So if the pattern continues, it's probably going to break out. Here's just double bottom base. Last week, broke above. So to me, it's still actionable. 84.50 is definitely an area of interest, but you can do what you want. I just got to look at the group. Once again, I'm just trying to keep an open mind here at the group. The finance consumer loan group, to me, this looks like a breakout, in the group. I just showed you a bunch of the stocks in the group, and I don't know which ones you like, or, but the group's definitely breaking out. I mean, that's a clear breakout. So I just showed you a bunch of stocks in the group. If you like one, pick one out, but it looks good. I'm just trying to keep an open mind. And when I'm going to the oil and gas stocks, I'm way out of my element here. Here you go. This is VNOM, Viper Energy. We got VNOM and FANG. We got the snake trade going on here. This one's consolidating in a base above its 10 EMA. You can see the moving averages if I zip in here, zoom in, how the 10 and the 21 have crossed above the 50. So this short-term moving averages are trading higher. Maybe it'll have some consolidation or a handle there at the 41 level, but we'll see. It might just rip right through it too. But that one looks strong. That's Viper Energy, VNOM. And I did mention FANG on the snake trade. FANG, Diamondback Energy. This has got more of a pronounced cup with handle. It had the pullback. So I think it's a little bit ahead of VNOM. You can see that pullback right there, 4 days. Thursday broke out and Friday pulled back. So it's giving you an opportunity here. They just bought a company, I forget which one. It was a pretty good deal, though, I thought, for a Diamondback. Don't really study this group too much. Just acknowledging here, this is LB. Obviously, it just came to market. This is probably a spinoff, 2.3 billion, but it looks like it was mispriced, right? Because on the IPO day, it was trading what, under $18, 18 to 23, and it closed Friday at 30. So maybe they mispriced that one, or maybe it's worth more, or I don't know. Somebody wants to buy it. So anyway, just pointing it out, 2.3 billion market cap stock. And let me see, is that the end of the oil and gas? No, I'm going to go for more. I'm going to drill down in this group. This is what I like, is a stock that's shown the ability to move, now consolidating in a base, trading tight, rallied through its 50. Now it's above its moving averages. So to me, that's definitely a stock of interest if you're into the oil and gas, the oil patch. And this is AROC, once again, showing the ability to run, consolidate, run, consolidate. This is like a base on base pattern, a cup with handle, and now just a cup. 2161, definitely a price of interest. But these stocks are showing strength. That's the point of this exercise today. All right, I'm going to go to an area that's kind of unloved. The cybersecurity stocks have been hammered. A lot of the software names have been recently, and this is Zscaler. More familiar with this group. And I just want to point out here that it's trading, it sold off down to 155. Let me zoom in here. Ran up to 193, got rejected. So went right through its moving averages, got rejected at the 200, came down to the 50 and got support. Now, the next time it came to the 200, it rallied through it. So it had a successful run above the 200 and then pulled back. And now what was resistance seems to be support, because it came back here on this day, came back here on this day, and it's trading above the 200 now. So to me, that 193.27 or even 200, if it trades above 200, I mean, it was a $259 stock, and it's got strong sales and earnings growth. 30% is not bad. So I'm keeping my eye on this, keeping an open mind that maybe these cybersecurity stocks will find some love, especially after that AT&T gaffe where they got hacked, and I got hacked and it really sucked. I had to change my number and just go through the corporate offices, and they gave me the runaround. It was a horrible experience. Their customer service is bad. Anyway, did I mention AT&T sucks? Yeah, okay. This is cyber. Rallied through its 50, and it's just surfing its moving averages. Now you can see the green and the pink went through the 50 there, the 10 and the 21. Now it's finding support at the 10. This one looks fantastic. 277 would be an area of interest. So some of these might be showing up on my ready list this week. Palo Alto Networks, another one that they had. Obviously, this one's shown the ability to run. It's a fantastic stock. It's a great balance sheet, cash flow, return on equity, if you're into that type of stuff. But anyway, consolidating in a base. Now it's starting to tighten up as it pulls back to the moving averages. So I expect it to, pull back to the 21 as it has and then bounce. It had an inside day on Friday. Another one that should be on people's watch list. That one looks good. CrowdStrike, to me, this is a leader of the group, but it broke out after earnings, and let me see. So the high on this day was 349, 92. Then it broke out the following day, January 10th, and the low was 367. So this whole time from January 10th, it had been holding above that 367 level. Yeah, it came down to 370, but on Wednesday it traded below it, 365. And so if it starts making new lows, it's in this, no man's land here where it might want to fill that gap there at 349.92. I'm not interested in holding a stock if it wants to fill that gap. But I will acknowledge it's still, for those people who like the Darvis box, it's still within that box there at 365 to 390, call it 395. And if it trades above 395 and breaks out of that box, I'm all in. But I had to sell it last week because it traded below the low of that breakout day on June 10th. So that's my explanation. That's my story, and I'm sticking to it. I also sold Spotify. Might as well throw Spot in here. I had it on my radar list, but it's still consolidating within a base. I recognize that, but it's trading below its 50, so I sold it. If it rallies back through, I could always buy it back, but it's just really this is opportunity cost when the market's ripping and there's a lot of stocks ripping, and this is just going sideways. You can get into better names that are running. So anyway, that's that group. The HVAC, the air conditioning group, is starting to heat up again. This is CARR, Carrier Global, which is a spinoff from United Technologies, consolidating in a base. Has it shown the ability to run it all? Oh yeah, it's ran, consolidates, runs up, consolidates, runs up. Now it's consolidating again. So is it going to break out and run again? Yeah, I mean, if history repeats and they keep delivering strong earnings, it'll probably break out and run higher. It's amazing how earnings do that. This is Modine Manufacturing. Once again, kind of a small cap, 5.6 billion market cap, showing the ability to move higher, form a base, sold off below the 50, just consolidating. It says like a base on base pattern here. I kind of like this one out of the manufacturing, the HVAC, building air conditioning group. Fix is another one that I like. And this one consolidating in a base, that's all. And let me see here. I just got to go to the group. I'm going to go to the group here. It's 16, so it's a pretty strong group. And it's a G3585. And you can see this group. This looks like a breakout to me last couple weeks, really, as it broke above broke out of this little box, if you will. If you're into the Darvis box, guys, when it breaks above the box, that's when they buy it. And then when it stalls, and you sell it and move on to something else. So that building heating group looks pretty darn good on all time frames. All right, I'm going to move on to the power group. Vertiv, obviously this one's consolidating in a base. It's having trouble at the 50. It looks like there's just some sellers there around the 94 level. It just can't get through there. I like it if it can get through there about 94.50, or if you even wait to the 97.50, but they have earnings coming up on the 24th. Definitely a stock that I like. Generac is another one of these power names. There was Hurricane Burl, so it got a nice move here off that news, but it's still consolidating in a base. And to me, it's extended. I got to wait for it to pull back and allow the moving averages to catch up. But definitely one that I'm going to put on my watch list. AMSC is another one in this power group. This one broke out, ran up, pulled back to the 21, found support, and is running higher. This one is a 1 billion market cap stock, and definitely one that could be a 10 bagger here. This is definitely one to watch. I believe, it's got some nice sales earnings numbers. So, try to keep an open mind here. ENVX, ENVX, I don't really know much about this one. There's a lot of people like to show that YouTube video with their technology, but it's all about sales and earnings. And so if they can get that, fine. But I just wanted to point that out. 3 billion market cap, maybe, if it has the sales and earnings, it could be a 5 bagger, who knows? But just want to keep it on the watch list, because a stock that moves like that is not to be ignored. All right, another group, the travel group, the booking group. This is Booking Holdings, trying to break out of a base here. These guys need to split their stock like everybody else is doing. Another one in this group, MMYT, that I kind of like. These are all near bases. They're all near buy points. This is Make My Trip, India-based online travel. Yeah, you can see the RS line heading north. This thing looks pretty darn good to me. And then CCL, which is the cruise lines. Leisure, you want to take a cruise? Certainly don't take one in a hurricane, but I had an inside week last week and looks pretty darn good to me. CCL. All right, now I'm just going to acknowledge, I know Tesla is the king here, but this is Ferrari or Race, RACE. These auto stocks starting to perk up here. You can see that nice move last week, 3%. So keep that one on your ready list as well. Rivian had a nice move, 22% last week. That's not to be ignored as it rallies through its moving averages. And then Ford. Ford surprised me as it tries to break out of this long consolidation period here. Auto manufacturers look pretty darn good. And my last group, Williams-Sonoma, more retail stuff. I just got to acknowledge these things cracked the top 5 retail home furnishings in performance, not rated, their performance. You know, how much the group is up for the year. Retail home furnishings is not to be ignored. Williams-Sonoma made a big move, 13% last week. We love that. Speaking of love, Lovesac, 25% last week. Thank you very much. We'll take that all day long. Still consolidating in a base here on the daily though. So even though it's extended, you know, keep an eye on it because it could move higher. And then Lazy Boy. Got a Lazy Boy in your house? Okay, so they're making a move here. No doubt about it, up 12% last week. Anyway, that's it for me. Thank you for watching my weekly review. Except for in honor of the great Steve Jobs, I'm going to talk about, I have one more thing. I'm going to talk about the small cap stocks that I think are going to start to run, and smarter people like Tom Lee have been saying that they're going to do well in the second half, and I'm not going to argue with Tom. I'm going to try to keep an open mind and just go through some of these smaller cap names. I would say anything under 10 billion is a small cap. This is TMDX, obviously shown the ability to move quickly, broke out of this base here after earnings, which put it on our earnings gap list there. It was 105 was the low that day, 124 the high, closed Friday at 142. So it's made a nice move. Finding support at the 50, reports earnings on August 1st. Keep your eyes on that one. Of course, LNTH, this is one that broke out following good news last week. It's still 8.5 billion market cap. Definitely one to watch here. It made a 56% move last week. Fantastic. Small cap, this is in the small cap group, LMAT, less than 2 billion. You can see this one's really shown the ability to move. And this one had an earnings gap too, right here on May 3rd. They're going to report July 25th. So keep your eyes on this one. This one is less than a 2 billion market cap. Okay, some retail names. I'm not going to get too deep into retail. I showed you Bros earlier. Elf is another one. This is really small, under a billion. Torrid Holdings, CURV. This is manufacturing, distribute footwear and clothes for men, women, and children. Just acknowledging the move here with volume, you know, stocks that move like that should get your attention here. You can see it's really having a nice climb here and still kind of in an IPO base here. And CROX, one of my favorite CROX. Don't sleep on CROX. This is still an 8.4 billion market cap, smaller name here, and it's got a lot of sales and revenue. Pulling back below its 50. They report on the 18th, which is this week, right? Thursday. I wouldn't be surprised to see this one rally through its moving averages as well. Anyway, I'm going to go to some really obscure names here. These are the banks, small cap banks. This is 2 billion. Heartland Financial holding company for Dubuque. Okay, so 870 offices, kind of as thinly traded, but I just acknowledging the breakout here of these small caps last week. So those are not to be ignored. We like breakouts that trade higher. NBHC is another one. What is this? 1.5 billion market cap. Bank Southwest, West Southwest. Just acknowledging the moves here. Just trying to give you some ideas here of smaller cap stocks. This is a tiny one, 580 million, a biotech, just acknowledging the move here, making new highs. Back to retail, JMIA. This is the what Amazon of Africa, just acknowledging the move here, making new highs. Ollie, just two L's, you dummy. On Ollie, 6 billion market cap, just acknowledging the move, making new highs. That one looks great too. I told you about Bros and ELF, and ASPN is another one. Aspen Chemical Specialty. You can see this move here on May 2. So they're due to report earnings here August 1st. It ran up, had those David Ryan ants, and it sliced its 50. Now it's rallied back through its 50. Sanmina, my buddy Yuri Sola. This thing looks fantastic. It's been consolidating for a long time. Very cyclical business, so maybe the cycle's starting to turn for them. It's under 4 billion market cap. TASK, this is one in computer tech services. You can see how it's sold off. Now it's trying to break out of a stage one, Weinstein stage one base. Looks pretty good, extended, but once again, 1.4 billion market cap. So just trying to give you some ideas. You could write those names down. And there's a lot more. I just, I'm running out of time here. People have probably tuned out by now. But anyway, thank you for watching my weekly review. And at mcstockcharts.com, we never give up.